Welcome to the Tradescores market analysis for November 16th, 2010. Before I get started with the analysis of the charts this week, I want to just highlight how you can subscribe to the Tradescores real-time trade alert service. Go to tradescores.com and click on the Alerts and Analysis tab. That will bring you to this page where you click on Learn More for Tradescores Alerts. And once you get into that page, you can read a little bit about how Tradescores Alerts works, as well as subscribe now by clicking on the blue link, and then you can choose whether you would like to do a monthly plan or a yearly plan. Plus there are a number of questions that you get answered on this page, and of course everything starts off with a 14-day free trial. Alright, let's get on to the analysis. I have logged into Tradescores. I have gone to the Chart Watch tab, and I have opened up a watch list that I have created for myself. You can see that it is showing here now with the ETF symbols of the ETF charts that I'm going to look at today, as well as their current stock score and what they did today in terms of price change. Now I can view the charts in two ways. I can go to Gallery or to Slideshow View. If I do Slideshow, I'm going to see these charts one at a time, and I think that's what I will do tonight. Starting off with the chart of the Dow 30 ETF, symbol DIA. Now this market was strong in the morning but faded into the close. We are right at an upward trend line. I could draw the upward trend line sort of a short-term basis, kind of like that, and we're really flirting with it right now. We have gone below it intraday, but we haven't closed below yet. And again, it's bounced off of that fairly well, but it hasn't really made an enthusiastic bounce. And so I am cautious on the Dow stocks. I think that we could see further pullback here if this support doesn't hold. Now basically we filled in the price gap and come right back down to what is support. So there's a lot of reasons for the market to bounce. We just haven't seen the bounce, and that is why I advise some caution. You know, the bounce could come any day, but of course we could also get a break of the upward trend line any day. Now here we have a chart of the Emerging Markets ETF, symbol EEM. The long-term upward trend line is really well intact, but the market has run away from that, and the latest upward move has pretty much been negated. We've pulled back to support. Again, a lot of reasons here for the market to bounce, but until we see a bounce, until we see a break of this short-term pullback, I'm going to be cautious on the emerging market stocks as well. All right, next chart we're going to go to will be found just by clicking on the next button there, and that brings up the Canadian dollar. Canadian dollar has done pretty well over the last few months. It's almost at par value with the US dollar. I think it's a good looking chart, but one that has some resistance that'll take some time to break through. Next chart is the chart of gold, and again, if we draw that upward trend line, we can see that gold bounced off of it a few weeks ago, and it is now back to that upward trend line again. What's important is that this recent breakdown, which has started a few days ago, is from a new high. It's not like we formed a falling top and then broke down. So that's a positive, but we are at that critical area of support where the market is at its upward trend line. So it should bounce. We just need to see the signs that it is bouncing. What I think is most likely to happen is we will get that bounce. We'll probably come up into here. My concern is that we then form a falling top, which is a sign of pessimism, and that would then lead to a break of that longer-term upward trend line. So keep an eye on that. So far we're still in bullish mode with the gold market, but there are some risks in the short term. Next chart is the chart of the TSX Venture, which has been a very strong market. It really hasn't made a pullback in the last few months as it's been rocketing higher. We're making that pullback now. I think it'd be quite reasonable for this pullback to come into here and then bounce. Seasonality-wise, there's a lot going for this market. It tends to do well from, say, November until April or May. And so we're really in a very early stage of that. I think we may just suffer a little bit of a pullback, and then the commodity market will firm up and we'll probably head higher again. So short term, expect some weakness, but longer term, it looks like a pretty good market to be in. Next chart is the chart of oil. And oil, with the strength in the US dollar, just like gold, has fallen back a little bit. But the upward trend line on oil is intact. That's a pretty short-term upward trend line. Really, when you look at this chart, it's been kind of a quiet market. We were stuck in that sideways trading range for some time. We've broken through that, pulled back after the breakout, pretty common. I think more than likely this market continues higher, but you may have a little bit of short-term weakness in oil, just as we have seen in gold. All right, next chart is the NASDAQ 100, and it too is making that pullback that we see in equities. When you consider how far this market has come, a pullback is reasonable. In fact, it is healthy because it works to recharge buyer interest. So I'm not too disappointed in this until I see a breakdown from a falling top. I'm not going to be too bearish. I just think we're going through a little bit of profit taking here, and ultimately that is good for the market provided we don't suffer a technical breakdown. S&P 500, similar sort of story. We broke through that long-term resistance just barely. Now we're pulling back, basically filling in that gap after the Fed interest rate decision, or I guess it wasn't interest rates, but on quantitative easing, and probably will bounce back, but we could see a little bit more short-term weakness before it bounces back. So, in the next few days, be cautious. You may see some selling, but longer term, the trend is up, and that should continue. The TSX 60, again, we've had short-term weakness. A lot of people, with a myopic view of the market would say that that is a bad thing, but in the big picture here, the trend remains up. The upward trend line is intact, and so as I've said many times during this video, the market is in relatively good shape longer term. Just short term, we're suffering some profit taking. All right, let's get on to my next chart, which is the Treasury bond market. Now, of course, the long bond, the 30-year, has been getting hammered. I have to say that I've been bearish on the Treasury bond index for a long time because it made a falling top. That's what we discussed earlier in the video. It then broke its upward trend line on a market that had been going up for some time, and really we're doing what the market told us would happen 4 or 5 weeks ago. We're heading lower. On the downside, we're probably going down too quickly. If you think about now, we have a downward trend line like this, and we're way below that. So this market is due for a bounce back, but longer term, I don't like this market. And a swing trader could maybe make a little bit of money on a bounce back, but I wouldn't step in front of this right now because it looks pretty ugly if you are long the U.S. bond market. Here we have a chart of the U.S. dollar, and as I said, the U.S. dollar has been strengthening. We just breaking through some resistance there and coming up to that long-term downward trend line. So the U.S. dollar, a real critical place as well. And of course, if we see a break of the downward trend line on the U.S. dollar, that could come with a break of the upward trend on equities. So we're in a real critical time this week. I think a lot could happen. Of course, I always believe that you trade with the trend, and the trend on the U.S. dollar is down. The trend on the U.S. stock market is up, but we could see a reversal of this trend in the very near future because we are at a critical point with those upward trend lines. Well, that has been the Tradescores market analysis for November 16th. For more information on what we offer, go to tradescores.com if you have an interest in that newsletter product, or you can also go to stockscores.com at www.stockscores.com. and check out some of our market scanning tools and the other things that we offer. Have a great week in the market and trade well.